Non-controlling interest is a subject that is not easy to understand. We're going to go through definitions to give the background information on what non-controlling interest is from a textbook standpoint. So what is non-controlling interest? Non-controlling interest defined by ASC 810-10-20 is the portion of equity, your net assets, in a subsidiary not attributable directly or indirectly to a parent. This is also known as minority interest. So when do you need to consider, or when does non-controlling interest arise? When a parent doesn't own 100% of a subsidiary, but has a controlling financial interest in that subsidiary. The example I'm going to go through at the end of this video is a parent is going to own 75% of the subsidiary. So there's 25% the parent doesn't own, and that causes non-controlling interest in your financials. So how do you present non-controlling interest on your financial statements? It's going to be in three areas if they all apply. One is your net income. You're going to back out the interest, non-controlling interest income related to the portion of the subsidiary that you do not own. You're also going to have an other comprehensive income. Same concept. You're going to back out the portion that the parent doesn't own of the subsidiary in other comprehensive income. And lastly, on the balance sheet, you're going to back out the equity or the net assets of the portion of the subsidiary that you don't own. And you're going to have this line item in your equity section of your balance sheet, of the consolidated balance sheet, of non-controlling interest. And the reason you're not reflecting 100% of the subsidiary's results is because you don't own 100%. So you have to show a line item backing out the portion that you do not own on a consolidating basis. That's the why you're reflecting non-controlling interest in your financials. Now, non-controlling interest can get extremely technical. I'm not going to go into all the different nuances. You can go to one of the big public accounting firms' websites. They have 1,000-page PDFs you can read on all the different scenarios you can run into with non-controlling interest. I do want to make reference to variable interest entities. On a surface level, does not have the ownership that you would normally see to consolidate into a parent. There's other facts and circumstances that would require you to consolidate that entity in your financials, whether that's voting rights, whether that is a profit sharing or revenue sharing situation. The attribution method that isn't clearly defined in ASC 810. You look at what the profit or revenue sharing situation is contractually to determine the percent of the non-controlling interest in a variable interest entity situation. You're also going to look at that if you own from an ownership standpoint. You're going to look at revenue and profit sharing before you look at ownership. If there's no clearly defined revenue or profit sharing arrangement, you're going to go down to the ownership level. I'm sure there's situations with a variable interest entity where you're going to use the contractual arrangement, but I've never run into that situation. I've always used ownership of the subsidiary to determine the non-controlling interest.